Good afternoon. It's Brian Shannon from Alphatrends.net. Let's take a look at this market here. It's Monday, the 5th of December, and we had another test of the 200-day moving average today, and the market closed right below it. That is on the SPY. We did finish with a gain of 1%, and when you take a look at the action, we'll frame it first with Friday's close because we saw the market go out on a little bit of a weak note on Friday, and then today we gapped significantly higher, came up to daily R2 and twice, and couldn't get up through that level. And now when we're going to look at just today's price action, you can see once we really broke that midday low and the volume weighted average price on some more rumors and news. I don't even know if it turned into news or if it was just rumors because you hear so much rumor and news. But the fact was we broke down through some support and lost the volume weighted average price at the same time. And from there, we had a strong sell off, a little bit of recovery here on lighter volume. That second drive lower got us down. We were still holding up above Friday's close and not closing that gap basically. But we held above the pivot, and you look at the 10-minute chart, we're still above a rising 5-day moving average, and we are still making this pattern of higher highs and higher lows. Now, if we make a little bit of a lower high tomorrow and then break down through this low for today, near about 125.5, then we're likely going to see a test of the 5-day moving average, and then we can see this trend line here in that same area now. So we have the trend line of the last 4 days since the most recent gap, and we've been observing a couple of these different volume weighted average price lines, one from the beginning of that gap higher last week, and secondly we can look at the last 4 days because that takes on significance here too, and you can see that will add a little bit of significance to this 125 and a quarter, 125 and a half level. So I think we break, in other words, below 125 and a quarter, we should see a minimum of a test of the 5-day moving average and probably down towards about the 124 level. The daily chart still leaves a lot to be desired. Again, we look at that we can look at this trend line. Well, I've still got on the VWAP line. And by the way, again, Mondays, this is brought to you by Realtic. Realtic is the software that we're looking at where I do these charts and draw on them. And there's a whole bunch more tools that I don't show you guys that are part of Realtic. And it's just a great trading tool that I've been using for a long time. And if you're serious about trading, I would suggest you take a look at it. But we've got this trend line, in other words, what I'm talking about here, since the July peaks, and this level is now looking like the area where maybe, because it ties together really with that 200-day moving average, that maybe this is where we're starting to see that resistance. It's not bearish yet, though. I mean, if you look at this thing objectively, we were up today. We are holding this trend line. We are holding support in an important volume weighted average price. So don't forget the markets can correct two ways: price wise or time, or which is what most people are looking for, if this thing to crash back down, or time-wise where it goes a little bit more sideways. Ideally, it'd be nice to see it back down near about 123, maybe rebuild some energy and then continue to move higher. But for now, cautiously turning a little bit more neutral just because we're in this zone basically where we found some resistance in the past in that trend line from the daily time frame with the 200-day moving average. But this trend line's still intact, so keep that in mind. The Nasdaq was up 1% as well, and again on Friday we talked about what a big mess this chart is. It continues to still be a big giant mess, and we've exceeded the Fibonacci levels we were looking at, so there's no reason to really continue to watch those. We have to say, well, where did we encounter resistance today? Basically in this little level above it. We have the potential, if we continue higher, up towards about 58.30, and if we're going to break down, well, it's not showing those signs yet. We've still got the same thing here. We've got this little trend line that holds. When we take a look at a volume weighted average price, one since last Monday's low, and then secondly from, what the heck's going on here? I've drawn it too fast. And one from the last 4 days since that second gap. This adds significance in here to basically Friday's low. I think you break Friday's low, 56.40, and then we're going to see this market at least test the 5-day moving average. I would expect to exceed it, and 56 would be the big level. Again, on this 60-minute time frame, we can see that 56 is the big area. If we were to pull back down to 56, I think that would be a good, healthy thing for this market. Get us back down to that 50-day moving average, consolidate, and maybe build for a new block higher. But it's just been, we're still barely positive for the S&P 500 year to date, but we've seen tremendous volatility, and that volatility continues. The Russell 2000 was also up 1.7% today, but again, most of that came right on the open. We saw some continuation, but then it did the same thing as the rest of the markets, obviously, which was to break down through that VWAP, and we had that little rally in the last 15 minutes of the day that got it up to the volume weighted average price. But this market is continuing to show volatility with most of the gains that we've seen, and I saw someone say maybe 80%. I'd have to check that out. But most of the gains have been accomplished only because of the gaps higher, and it's difficult to have confidence to hold these markets in this precarious position with all the global economic news that continues to come out, and news and rumors that shake this market and make it so much more volatile. The semiconductors up a half a percent, or I'm sorry, 1.5% today. It was up 47 pennies, and same thing here. We've still got, this would to me be the essence of the trend line. Other people will probably draw it like this, but I think that the where you hit the most points is probably more accurate to represent trend. The 4-day volume weighted average price in here ties in at about $30.75. So I do think that 30.75 and actually 30.60 Friday's lows are going to be important. Look at the 30-minute time frame. It looks like we have resistance. We're in a band of resistance that it shouldn't be able to just break free from here. There's still a lot of prior transactions that occurred over here, which represent the potential for supply or resistance, because people who bought there got trapped on this down move. Now they're looking to move to the sidelines maybe and lighten their positions up. The financials continue to hold impressively above the 50-day moving average, and also that important level of $12.80. $12.80, of course, was this bigger level that got broken a couple weeks ago. Last week we got above and held above it, and we still have this pattern of higher highs and higher lows in the financials. It's not pretty to trade, but it is. If you've been holding it on the long side, you've got a nice trend going in here, and I'd say protect it, because not one of these rallies has succeeded in the financials this year, and that is holding the bulk of the gains, and we've still got just a giant mess on the bigger term pictures. So everything remains basically a mess. We're getting a little extended here in the intermediate term after the last 6 days where we've shown good gains, but that doesn't mean it can't continue higher. It means time to continue to be exercise real caution here, and that'll do it. Thanks for tuning in.